Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the CEO of the European Banking Federation, Wim Mijs. Great to see you again.
Good to see you, Elliott.
Okay, so before we get cracking, let's learn a little bit more about the European Banking Federation. So, Wim, you represent the European banking sector in Europe. What are the top three priorities right now, and for you and your organisation, and I suppose by definition, the main priorities for Europe's banks?
Well, if you would look at it, we have a huge role to play in funding the future of European economy and society. And if you look at the way the resilience of the European banking system, it is resilient, but the question is, can it invest in the future, invest in what's needed in the digital transformation, the sustainable transformation, in our retirement for elderly, also in defense. And if you look at the Draghi report and the Letta report, we can't. So we need the boost, and we need to see the banks actually as a strategic sector. If you look at the Draghi report and the 1 trillion that is needed, you see that this cannot be done by public money alone. We will need investment through the Savings and Investment Union, but you also need banks. And that brings me to actually the three top priorities. The first is to look at if we still have the right balance between risk and financial stability. So, for instance, my chairman, Slawomir Krupa, has published an article in Les Echos in which he says that there are involuntary capital buffers, and it's these capital buffers that take money out of the economy. So that's one thing that we should look at. The second is, in Europe, we're good at legislating. And if you look at the digital transformation, there are 17 or 18 new legislative measures that we took. But the importance is that we get it right in research and we finance our research so that we enable before we legislate. And the third one is the Savings and Investment Union, where we have to get more people that currently do savings and have to get them to the market. But to do that in a safe way, you need good legislation, you need attractive offers, and you need good financial education.
And so, Wim, I just want to go back to your first point, I think, which, if I'm right in understanding, is kind of what's happening in Europe. Europe is behind the US, effectively, where regulations seem to have been eased somewhat to enable banks to not have to hold as much capital. And we've seen, I suppose, a big boost in dividend payments for a start. But I suppose in Europe, you would argue, or European banks would argue, that, if regulators kind of eased off a little bit, there would be more money for European banks to lend to businesses and consumers, and that would be for the betterment of the European economy as a whole.
Well, it's not so much that I ask them to ease capital levels, and we have learned the lessons of the great financial crisis. But when we built the new resilient banking system and the banking union and our new supervisor, there were, of course, involuntary measures that are almost technocratic, that ask for more capital add-ons, as they're called, and they're both at national level, but also at European level. So what we are calling for is to have a hard look at these involuntary levels, not at a lowering of capital levels as a whole, because we've seen through the past crises that we have, COVID and others, we've seen that resilience is important in the banking sector. But what we are asking for is that all these millions that we don't know about and still bind outside of the economy, that we look at these.
Right. And you mentioned the banking union. Of course, the idea of a fully functioning banking union remains a goal of the European Union. I mean, have we got any idea when that might become a reality, and if and when it does, what benefits that would bring to banks and also to businesses and consumers?
Well, it remains a policy of the European Bank Federation as well. We very much believe in the banking union and in all three pillars. But it means that it's alive. Let's just say that it's quite an achievement that we have a uniform supervisor that was credible from day one. And I think we should be proud of that. But indeed, it needs to develop. It needs to develop and over the course. And so I look forward to the Eurogroup taking steps to see what can be updated, what can be different. But I think that is a great achievement. The second is on the single resolution mechanism. Very good to look at that if it's still fit for function. And the third, of course, is a uniform and European deposit guarantee scheme. I heard recently that Chancellor Merz of Germany uh, wanted to delay further implementation. But having said that, it is not crucial. It's important, but not crucial. What we have achieved up until now is important, and I think the resilience for the bank sector and towards the citizens is also important.
Okay, I want to ask you a bit more about the kind of technology side of things now, because since we last spoke, I think it was a couple of years ago, we've seen neobanks getting bigger. We've seen open banking and digital payments continue to grow. How far along these paths are we, and how much further do you think we have to go?
Well, it's moving and it's moving fast, and it will go much faster. I think artificial intelligence, generative AI, and others will accelerate, and that gives us huge opportunities in my view. What we've seen, of course, is that in 2016 we talked about fintechs, and to be honest, I always thought they were a fantastic add-on to the bank sector as is, because here you have super bright people that would take one part of the value chain of banks, optimize it, and then either sell it under license to banks or sell themselves to banks. And it was a great revolution, and it was really a step forward in the customer experience. And it also forced banks to be agile and to think much harder on how to digitalize themselves. But for me, fintech always was a huge way forward. And indeed, especially the cooperation where banks have the money and the clients to invest, and fintech comes up with great solutions, you see that this has normalized this relation. What you now see, of course, and certainly with the change in the government in the United States, is that big tech is actively looking in fintech, and all that is fine. Competition is fine, but we need to realize what the basics are in big tech, what it wants, and how it can serve the economy of Europe. And again, that's what we're looking at. So in my view, I'm a tech guy, so things cannot go fast enough, and I hope they go faster and will make the experience of working with a bank and working with financial services better.
Okay, so we've heard about the European Banking Federation and about some of its priorities and concerns. Let's now get to know Whim a little bit better. So, Wim, you've been at the EBF now for more than a decade. Do you still feel you've got a lot to do there, that a lot to achieve? I mean, you must have, kind of ticked off a lot of things that you planned to do when you arrived. One wonders how many you've got left.
Well, there's always things left because in the EU there are always things left to do, and the banking sector is changing so quickly. So I still enjoy myself, and at the same time, I branch out. Of course, I am also board member, for instance, of the Dutch Royal Automobile Club, but also of Salzburg Global and the European Parliamentary Financial Service Forum and Leiden Law School. So I do a lot of things that again make me enjoy, and in my view, it sharpens also my own sense in my role as CEO of the European Banking Federation. Because if you look at it, things are moving so fast, not only in the banking sector. We just talked about generative AI and what impact that may have. But if you just think about the crisis, the invasion of Russia into Ukraine, the COVID, and all the crises that we have, and so optimizing the banking sector by itself is still exciting and still excites me. If you look at the organization, I think I've met most of the goals that I set out back in 2014, but that also makes it a very useful and sharp tool, and it's a joy to work there.
Well, and I should also point out that it's almost like you read my next question, which I should note to our viewers, you did not, which was about all the other things that you do and how you are, among other things, on the board of the Dutch Automobile Club. I'm guessing that's perhaps the most enjoyable one of the lot, or the most fun. Are you a bit of a petrol head?
Yeah, I'm not a bit of a petrol head. I'm a huge petrol head.
What do
A
you
worrying.
drive? Do you race? What do you drive?
Nah, well, interestingly, I've also always been interested in cars. From a small child onwards, my father was quite technical and interested in cars. And then it started by first repairing mopeds and then the old motorcycle before landing on cars. And for me, it's the mechanics. I love the mechanics. I think it's the way it works and the way I'm one of these kids that if something wouldn't work, I would take it apart and try to fix it. And the first 10 years of your life, this goes horribly wrong. And after 10 years, suddenly things start working again. So I've always been into classic cars, mostly British classic cars.
Thank you.
Although I now also have an Italian classic car,
So
but mostly Triumph and MG and Jaguar, because you can work on them and the parts are readily available. And now I recently also acquired an Alfa Romeo Giulia.
wow. And sorry, the Jaguar, would that be an E-Type or something?
I'm working on an E-Type, but that is far from finished. I really took it apart, so that will take another year. But I have a Jaguar Mark II, actually.
Okay. Well, I can imagine your office at the EBF kind of, having like kind of bits of engine and other things knocking around the room. Perhaps almost like your room there, Wim, because one can't help but notice you have one or two guitars. So as well as being a bit of a petrol head, are you a bit of a metal head as well?
Yeah, it's not so much a metalhead. Going back to my office, my office is more like a meeting room, and it has model cars in
Okay.
it. So the rule is you can use my office anytime you like. Touch the cars, you're dead.
Okay.
So,
Well,
so
everyone
there
watching
are
has been
model cars
warned.
there.
Okay. Well,
Yes, exactly. So that's one. But indeed, I've been playing guitar since I was 10, and it's the same fascination, actually, the same fascination with music. I was lucky enough to be able to play in bands when I was a student that played a lot, what I would always call the dance and disco and rock music. And that gave me friends for life, but also enabled me to play a lot of guitar and record. So yes, these are my two big passions:
very good.
driving and repairing cars, and playing guitar.
Okay. And I assume people are not allowed to touch the guitars either.
Oh, the guitars they
Oh,
can
they can
touch.
touch the
The
guitars.
guitars
Okay.
are.
Don't.
I was my son actually also plays guitars, and it started with him sneaking in my room and using all the
Oh,
guitars.
well,
Oh, that is, if you can play, Elliott, come here and
okay.
take any guitar you want and play it.
Well, I can't play, but I will definitely not touch the cars if I ever find myself in your office. But look, Wim, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very short break, after which we're going to continue our conversation with the European Banking Federation CEO, Wim Mijs. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Wim, let's talk about the future of finance. So, we touched on this a little bit more about regulators, perhaps in the US, being a little less strict than they once were, and regulators here still, perhaps focused more on ensuring that the banking sector is more resilient. Would you say that regulators have things about right in terms of capital buffers and all the other regulations that banks across Europe are having to contend with?
Well, I'm not sure if it's less strict in the United States. A few years ago, we did a study together with Oliver Wyman to try to get to the bottom of this. Because anyway, anytime I would talk to European bankers, they would say that the United States is so much lighter on capital requirements. And then I would go to the United States and American bankers would say exactly the same about Europe. So we wanted to get to the bottom of this, and we may try to make some kind of a comparison. And if you look at that comparison, you can really see that. And for me, this was not the absolute truth. The document was, and the study was used to start a conversation with the single supervisor, as our single supervisor, because we wanted to know. And if you look at it, you can see that indeed on capital, US may be lighter, but they are sometimes quite individual on stress tests, etc. Whereas in the EU, we have two things. It's pretty hard on capital. I talked about the capital add-ons, and so some are clearly meant to be hard, but some are involuntary, and it's the latter ones that we need to look at. And it is slightly different. What I found very interesting is that our single supervisor, after being very, very unhappy with me for for making this report, nevertheless made their own tests, which they haven't shared with the world. But for me, that was exactly the one thing I wanted to achieve. I wanted them to have a hard look at where the differences are. And now, of course, in the new Trump administration, you see that the European Commission has become much more assertive on how they deal with capital compared to us. And I think that's a good thing. Again, never wanting to undermine the resilience of the bank sector.
Right, of course. And I mean, you've mentioned a couple of things, such as, of course, risks and crises that have come up over the last few years, whether it's COVID or the global financial crisis or geopolitical crises. What kind of keeps you up at night? Is it fear of another pandemic, trade war, an actual kind of, bigger war somewhere? What is the main thing? Is it like some massive kind of hack? What is all that AI takes over the world? What's your biggest concern? What keeps you up at night?
What keeps me up at night actually is a cybersecurity attack on a liquidity sensitive part of a bank, on a major bank, and us not being able to prepare for that. The fact that it keeps me up at night actually is good, because it also keeps up some other people who are heading the cybersecurity efforts at banks and our supervisors. So this is one of the issues that we really look at hard. So what happens if you have a catastrophic ransomware attack or cyber attack on one of the systemic banks in Europe? And what can we do? How can we deal with it? How can we work together? What should the measures be? So that's one. Second, war is always the most human, the biggest catastrophe that humanity can have. So that's keeping me up at night. But for the banks, really, this kind of cyber attack is something to really have a hard look at and to prepare for.
And would you say that this is, because I mean, I would imagine by now that pretty much all systemically important banks have pretty decent cyber defenses. But as we've seen with hacks on, for example, retailers in the UK of late, such as Marks and Spencer, it always seems to be that there's a human being as the weakest link that somehow gets, a phishing email or somehow is blagged into giving away details that they shouldn't otherwise give. Is that the way that you would see as the most probable means by which such a catastrophic attack would take place? Or would it be a kind of, more of a technological attack which actually finds a way of breaching cyber defenses?
Well, if you look at it, I must say the banks are amazing. If you go to the cybersecurity centers of banks, they are at the forefront of the fight against cyber attacks. And there's a good reason. And the reason, as I always say, is in the past, banks had actual money in a vault. So bank robbers would try to get in. And now the money is virtual. So the attack is virtual as well. But it's the same game. And banks have been good at it. So the banks themselves, I don't worry about. I don't even worry that much, even though there are human errors, as you say, is quite possible. But I feel that the checks and balances are such that it is impossible for one single human to really create an open door to a catastrophic attack. And so again, you never know, but that is what the system is built on, that you're not able to really go to the core. But indeed, in the cyber attacks that we've seen, you see that they sometimes use suppliers. One important thing, if you think about Garmin a few years ago, um, it came through their Taiwanese supplier, so the factory where they built the watches in Taiwan, and were able to enter into the core system. So all these things, these are things to think about. Same with Marks and Spencers. But I am pretty confident that banks, because they are such an obvious target, that they are really at the forefront of security. Having said that, ransomware as a service is dangerous because these are highly professional gangs, and state actors. These are the two that are really capable to do a lot of damage.
Okay. Of course, artificial intelligence, you've mentioned it a couple of times. It's it's pretty much all anyone talks about these days as far as technology is concerned. I mean, what for you is the great promise and also the greatest risk that artificial intelligence poses to the future of the financial system?
The greatest promise is really the seamless experience. I again, as I said, I love tech, so I've been playing around with ChatGPT since it first came, and you see how much more of a partner or sparring partner or assistant, how much more interesting it has become. If you, for instance, look at ChatGPT Deep Research, you have to know your stuff because it still hallucinates and it still makes the most crazy suggestions. But as a partner, if you prepare something, to use it as a sparring partner and speak with it and get feedback is really a pleasure. It's as if you are talking to a colleague. But again, you need to know your own stuff because it can sometimes go wildly off, which I then see as creative. But thank God I've never said something like this in public because it was really off. But for me, the opportunity. So if you look at that, if you start with the human interaction, the almost human partner-like interaction, and you then think about all the things you want to know about your bank or your finance, but were afraid to ask, or you think of just after the bank employee is gone, or whatever, you can talk about it. Other thing is tools of financial education. Sometimes you're reluctant to ask if you don't understand what compound interest is because you're afraid to look like a fool. If you are talking to ChatGPT or any generative AI agent that acts like your partner, you will ask this, and it can then also give you tools for better financial education. If it gets to know you, it can give very precise advice. So all these are opportunities. The negatives are, of course, is they're only as good. They're only as good as their algorithm, and we've seen some biased algorithms. We've seen mistakes in it. We've seen people being excluded, groups of people being excluded. These are all the real risks.
Okay. I think we've got time for just one more in this section, Wim. I want to talk to you a bit about crypto because stablecoins in particular seem to be having a bit of a moment this year. Are they going to revolutionize payments, especially cross-border ones, or do we all need to just calm down a little bit?
They can. If they can revolutionize. In any way, the payments area is very interesting by itself because you see that there is a lot of movement going on. You see, on one hand, that if you look at Europe, I would argue that single euro payments area credit transfer, SEPA credit transfer, is fast, it's resilient. Well, fast, it's almost instant in many cases. It's resilient, it's safe, and that works. So, but that's credit transfers. Now, if you look at instant payments, you see again things are happening. You have the instant payments regulation, which I find interesting. You have many of the instant payment solutions in country, in Spain, Bison, and in the Netherlands, Ideal, and you have many others, which are absolutely perfect. But now to tie them together cross-border is interesting. And you see that there are two attempts, well, there are quite a number of attempts, but two that I want to mention. You see the European Payments Initiative that is trying to build a cross-border instant payment system, which is interesting. But you see that the difference on how much appetite countries have to participate has a lot to do with the maturity of their investment in their national payment schemes. So you see that, and you see that there we try to be interoperable or interfunctional, and you see that is moving. The second driver at this moment is the digital euro project of the European Central Bank, which also is not only a central bank digital currency, and that's interesting because that is, of course, the alternative to stable coins from a central bank. But it is also, if you look at it, a digital wallet and an instant payment system. So you see there is a lot of movements. Can stable coins revolutionize? Absolutely, but it's not the only development.
Okay. That's great. So look, Wim, it's time now for our round of rapid fire questions. Are you ready?
I will try to be ready.
Okay, so I've got 90 seconds on my phone's timer. I will start the clock. I'm just looking for one-word answers. And when my buzzer goes off, we will finish that particular question and end the round. So without further ado, away we go. What fintech segment, in your opinion, has the biggest potential over the next 5 years?
AI.
What is the biggest pain point in your everyday financial life that you'd like to see resolved?
Investment, MiFID investments.
I thought you might say paying for petrol. Are bank bosses ready for the AI revolution?
Yes, they are.
Are customers ready?
They're getting there.
Have regulators in the EU and US kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
They are trying to, but they need to run faster.
Have you personally ever invested in crypto?
Yes.
Are physical points of sales part of the future of finance?
Yes, human touch.
Are bank branches part of the future of finance?
Yes, same human touch, but not many.
One-word answers, Wim. On a scale of 1 to 10, 1 being the lowest, 10 the highest, how likely do you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank? So between 1 and 10, 10 being the most likely.
9.
That CBDCs, central bank digital currencies, will become a mainstream reality in the US or EU.
9.
That you'll be able to open a crypto account at a top-tier bank.
10.
That SWIFT will still be the main tool for using for transferring money around the world.
8.
That a new card or non-card-based rival will emerge to challenge Visa, MasterCard, Amex and the like.
10.
And finally, that we'll see a top-tier bank or insurer bought by a fintech. You could still answer this one.
7.
Wonderful. We got through all of those. We don't often do that. But I'm afraid that is the end of our round of rapid fire questions and all the time that we have for our conversation. So I really just want to thank you, European Banking Federation CEO Wim Mijs, for joining me once more today. Thank you so much.
Thank you very much, Elliott. It was really a pleasure to talk to you.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.